Comparative analysis of ExxonMobil, XOM, against its key integrated oil and gas competitors. The data used is from the most recent available annual or TTM, trailing 12 months periods, primarily reflecting 2023 results. 2. Ratio analysis and comparison. The following table presents a side-by-side comparison of 15 key financial ratios for ExxonMobil and its peer group. The data provides a robust view of their relative performance in terms of valuation, profitability, financial health, and growth. Ratio ExxonMobil, Exxon, Chevron, CVX, BP, Shell, Total Energies, TTE, ConocoPhillips, COP, Occidental Petroleum, OXY, Equinor, EQNR, valuation, PE ratio, TTM, 1123, 12.87, 6.81, 11.08, 7.97, 10.192, 10 by 59, 7.95, forward, PE, 10.99, 12.35, 7.37, 10.115, 8.87, 10.74, 11.23, 8.12. PEG ratio PB ratio 2.163105148 125 211 115 PS ratio 111 141 058 088 074 205 160 095 EV EBITDA 537 642 488 509 438 548 632 351 profitability ROE 91%, 33%, 11.6%, 92%, 20% 5.6%, 22.8%, 26% net profit margin 9.8%, 9.5%, 8.7%, 5.6%, 5.6%, 18.8%, 15.0%, 11.1% operating margin 30.8%, 30.6%, 40.7%, 1200%, 10.4%, 20.0%, 70.5%, 15.0%, gross margin 33.3%, 38.9%, A, 26.0%, 25.0%, NA, financial health, DE ratio, 0.8, 0.3, 0.44, 0.43, 0.35, 0.35, 0.69, and free cash flow, FCF, TTM, 36.1B, 19.8B, 8.0B, 20.4B, 35.9B, 10.1B, 6.9B, 19.7B, growth and efficiency, EPS growth, YOY, 35.0%, 40.1%, 7.9%, 66.3%, 33.1%, 42.5%, 5.8%, 49.0%, revenue growth, YOY, 16.4%, 16.5%, 28.9%, 27.8%, 70.4%, 19.9%, 18.0%, 23.0%. Return on assets, ROA, 8.8%, 8.2%, 4.3%, 4.3%, 5.0%, 12.1%, 14.8%, 7.6%. Export to sheets. Note, all growth metrics are for the most recent available annual period and are heavily impacted by the decline in commodity prices from their 2022 highs. Ratio interpretations. PE ratio. ExxonMobil as XOM, PE of 11.23, is in line with its major peers like Chevron and Shell, and slightly higher than BP and Total Energies. This suggests that investors value its earnings similarly to other industry leaders, but not at a significant premium. Forward PE. Exxon's forward PE of 10.99 is slightly lower than its TTM PE, indicating that analysts expect its earnings to stabilize or slightly grow in the near term, a positive sign relative to its recent past. PB ratio. XOM's PB ratio of 2.15 is higher than most of its European counterparts, BP, Shell, Total Energies, Equinor, and similar to its U.S. peers, CVX, COP. This suggests the market values XOM's book assets at a higher multiple. PS ratio. ExxonMobil's PS of 1:11 is at the lower end of the U.S.-based companies, but higher than the European ones. This implies the market assigns a higher valuation per dollar of sales to Exxon than to its European competitors. EV/EBITDA. At 537, Exxon's EV/EBITDA is very competitive and falls in the middle of the pack. This ratio accounts for debt and cash, providing a more balanced valuation picture. ROE, return on equity. Exxon's ROE of 19.1% is solid and a key strength, indicating excellent efficiency in generating profit from shareholder capital. It's among the highest in the group, trailing only Occidental, Equinor, and Total Energies, which all demonstrate exceptional capital efficiency. Net profit margin. At 9.8%, XOM's net profit margin is healthy and on par with Chevron. This shows it effectively manages costs and maintains profitability even during market volatility. It is particularly strong when compared to the European majors like Shell and Total Energies. DEE ratio. Exxon's DE ratio of 0.20 is exceptionally low and a significant competitive advantage. It's the lowest in the group, highlighting its strong financial health and ability to withstand market downturns without excessive leverage. This is a key indicator of its balance sheet strength. Free cash flow, FCF. ExxonMobil's FCF of $36.1 billion is the highest among all its peers, demonstrating its superior ability to generate cash after capital expenditures. This immense cash flow allows for significant dividends, share buybacks, and investments in new projects. Growth, EPS, and revenue. Nearly all companies, including ExxonMobil, show negative YoY growth metrics. This is not a sign of poor performance, but rather a direct consequence of the sharp decline in commodity prices from their record highs in 2022. ExxonMobil's negative growth is less severe than that of many of its peers, which suggests a more stable or diversified business. ROA, return on assets. ExxonMobil's ROA of 8.8% is strong, but trails Occidental and ConocoPhillips. This indicates that while ExxonMobil is efficient, some of its peers are better at generating earnings from their total assets. 3. Industry context. The oil and gas sector is cyclical and highly sensitive to commodity prices. Therefore, typical benchmark ranges for financial ratios can fluctuate significantly from year to year. Valuation ratios, PE ratios for stable integrated oil companies often hover in the 8 to 15 range. ExxonMobil's PE of 11.23 falls right in this healthy range. Profitability ratios. Net profit margins for major integrated oil companies are typically in the 5 to 15% range. ExxonMobil's 9.8% is solid. Financial health. A DE ratio below 1.0 is generally considered very healthy for this capital-intensive industry. ExxonMobil's ratio of 0.20 is a sign of exceptional financial discipline. Growth. In periods of falling prices, negative growth rates are normal and expected, as seen across the board in this analysis. 4. Overall assessment. Based on the collective evidence from all ratios, ExxonMobil, XOM, emerges as a top-tier performer within its peer group. While its valuation metrics like PE are in line with its major competitors, its core financial health and operational efficiency are what truly set it apart. ExxonMobil's exceptionally low debt-to-equity ratio and peer-leading free cash flow are its most significant competitive advantages. These factors underscore its strong balance sheet, providing resilience during market downturns and the financial flexibility to invest in future projects and consistently return capital to shareholders. While its profitability metrics are competitive, they are not always the absolute best. But its sheer scale and robust financial foundation make it the most stable and financially secure investment in the integrated oil and gas space. The negative growth rates seen across the board are a temporary industry-wide trend, and ExxonMobil's ability to maintain strong profitability and FCF amidst this shows its operational strength.